What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Guy Bateman. Guy, how you doing today?
I'm doing fine, thank you, Dan.
Excellent, excellent. And I got to tell you, Guy, I'm really happy today because my very favorite audience member is watching today. And why is my favorite audience member watching today? It's because this is a chance encounter where I interview commercial syndicators, investors, buyers, sellers, all those types. And why do I do that? Well, part of it is the law. See, whenever you have private deals, you're not actually allowed to publicly solicit people. You need to have a prior substantive relationship, whatever that means. And so what I'm doing is I'm finding out the people in my circle, is there any overlap in our business? What exactly are we doing? But I'm making sure that you understand how my guest fits into a deal. But before we get too excited with that, Guy, do you want to introduce yourself a little bit to the audience?
Yeah, hi. As I said, my name's Guy Bateman. I am the president and CEO of Montois Realty Incorporated. And what we do is we buy and sell real estate, primarily in the state of Montana, focusing on multifamily properties and hospitality properties, but also buying multifamily properties across a broad swath of the southern United States. I would hasten to point out that despite the name of the business, I am not a realtor. I am a real estate investor and/or a real estate entrepreneur.
All right, beautiful, beautiful. So the next thing that I want to go through is not the tolerance for risk assessment. It is, I'm just going back to the beginning here, and there we go. The five distinct motivations, a little bit of technical difficulties. But of course, the thing I want to ask first, though, is but wait, check your eight. Guy, I don't know if you can see through your camera and into the audience's device, but under there may just be a big ugly red button, and they're the worst. It's like they're so bad. It says subscribe on it, and they really should hit. Okay, I'm just kidding. Let's go through the distinct motivations. I found there's five of them. The fact is when you make a commercial acquisitions, it takes months and all sorts of attention to detail. So I really want to know why people are bothering to do this in the first place. And of the five, here's the first one. Some people, they've already got a portfolio of assets, and the way that they make ends meet is just from the proceeds of owning that portfolio. Okay. So when inflation rears its ugly head, or if there's an asset crash of some type and they're looking for some place to put their money, that's when these people will make a new acquisition and then keep the party going, because inflation will definitely ruin the story, ruin the party, I should say, after enough time. But that's not me. What I'm up to is I'm trading my time directly for wealth. And I've got a background in technology. So, of course, that means I'm a high wage, high salary earner. My background specifically is in CRMs. I've owned a CRM agency since 2011. But the problem with making salary or wage is you're paying more tax than anybody else. So it hit me as like, well, how can I pivot then where I'm getting rewarded in the form of deployed capital rather than in cash and giving half of it to the government. So that's really what I'm up to. But a lot of people are originally attracted to commercial real estate because they want to take control of their schedule. Maybe it's because they want to leave the door open for retirement. Maybe they want to fast track it. Maybe they only want to work fewer months per year, or maybe it's fewer weeks per month. But that's definitely a dialing back. And that distinguishes it from the next two. Like, for example, this next group, they're so ambitious. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. And so they're going to be hustling into their 90s. So they're not looking to dial back at all. Just like the last group, some people have picked a sector of society. I like to joke that they want to save the world. But whether it's people or if it's the environment or it's animals or sending people to space, whatever it is, if you want to make a big impact, you're going to need a financial backing. And that's why some people are making these acquisitions, is to save the world. So, Gaia, of these 5 different motivations, what combination of them would you say describes you best?
Well, I would say, since I'm already retired from my W-2 jobs, that I am most interested in building generational wealth. And once I feel I've secured enough financial security for my own future, moving forward, I intend to give back. And the things that I tend to give back to are the natural environment. And more specifically, I like to accumulate huge amounts of wealth and buy lots and lots of land and help to maintain it in perpetuity into the future for future generations.
Yeah, that's an awesome, awesome thing. And the next question then has to do with the tolerance of risk, though. This is kind of a fun one. Keep it really, really light. It's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. What do you think is too risky, Guy?
This is easy. Bitcoin.
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 Yeah. You don't get paid to own it.
Bitcoin is a scam, pure and simple.
Yeah, yeah,
I
it's
know that's a controversial opinion, but I think the recent events are bearing out that opinion.
Yeah, it's a lot. We're at the end of 2022 right now, and yeah, that's becoming a lot of people's opinion for sure. I definitely get it. I don't like anything where you don't get paid to own it. That it's like it kind of destroys the point of owning something, I think. But whatever. Anyway, let's talk about our preferred mechanism for investment, which is commercial real estate. And to do that, I'm going to use the dandoesdeals.com commercial competency cube. Try and say that a few times. As you type it up in your browser and go to dandoesdeals.com, you can get your own copy for free. I don't even ask for your email address, which is the worst idea when it comes to marketing. You always should ask for that contact information. But the fact is, I want you to be like hundreds of other people who've printed out their own copy and then they use it to practice and make sure that they can effectively communicate on the subject of commercial real estate. And that's really what's going to decide your future in it. But in every episode of Chance Encounters, I go through all 6 sides. It only takes about 2 minutes. And then that way you, even if you're just beginning, you can see how my guest fits into these deals. So first, let's talk about the repositioners. The repositioners look at lots of different properties because they're acquisitions people and they do a bunch of paperwork. What are they doing with this paperwork? Well, there's a fancy word for it. The first thing they're doing is they're underwriting the deal, which means they're doing the math. They're figuring out, first of all, hey, this broker or seller, is this property actually even making the amount of money that you claim it is? You need to find this out. But what are they really looking for when they're crunching those numbers? Well, they're looking for upside. How can they run it more efficiently? How can they make more money? And the first tool in their tool belt is if they have better financier options, basically they can get more attractive loans from the people who just handle money and paper, then they have upside baked into the deal. But if that's not available, the first place they're going to look is operations. They're going to say, how can we get those Benjamins from going down those toilets? But there's more to operations than just unclogging toilets and collecting rents and mowing lawns and all that kind of fun stuff. Like, one of the things is, how do you make sure that the vacancy rate stays low, which is a marketing piece, which is one of the things that's in my own background. And then of course there's the automations from CRMs that I have that I offer my teams. But fact is, commercial real estate is so competitive. Often operations and making them more efficient, that's not going to be enough. So they get a contractor team. They improve the units so that the next tenant will be happy to pay more in rent than the previous one. But that's a very expensive habit, getting, contractors in and building stuff. Like, you don't want to be gold plating toilets or anything like that. But the one problem that a repositioner might have, if they're like me, see, I don't know if you know this about me, but I'm from the internet. So that means if there's a problem, I'm not going to be able to be there in an hour or two. So I'm going to need a local. I'm going to need boots on the ground who can be there in an hour or two, because I'll still be stuck at the airport. That's not going to be me. But When the repositioner has all this team and this property in mind, they turn around to the financier and they say, "Hey, I got a property and it's worth tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend me, do you?" Well, the financier is going to have one big question that I haven't answered yet, and they're going to ask, "Who is your KP? Who's your sponsor KP? And what's that all about?" Well, if you and your pals pool up all your funds, you want to take over a 350 unit apartment complex, the problem you're going to run into is you won't be eligible for a commercial loan unless someone in the fold already owns a 350 unit apartment complex or something similar. Okay. And on top of that, you're also going to need a certain amount of liquidity. And then among the owners, you're going to need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Guy, where do you fit in on that? Like, I don't know if you're fully passive. You mentioned being retired, so I don't know if you focus on LP positions or if you're on any GP teams looking to build teams or whatever. But what are the roles that you anticipate bringing to your next deal?
Well, I will say that I do have some of my retirement money in IRAs invested as a limited partner, but primarily what I am is repositioner. So I'm looking for deals, I'm finding deals, I'm doing the preliminary analysis on deals and putting deals together along with some of my partners. And then we take them and present them to the financiers. And we're focusing, as I said before, on hospitality and multifamily properties. So in addition to finding the deals, doing the initial underwriting, doing the relationships with the brokers, et cetera, I'm also heavily involved in managing the asset once we gain ownership of it. Managing the asset at a higher level, not the day-to-day management of the property itself, but managing the asset and overseeing the property managers.
All right, beautiful. So that brings me to the sweet spot. So when investors or syndicators are talking to each other and they say, "Hey, what's your buy box or what's your ideal property?" They're really talking about three main things. The first one, geography. Where, okay, which states, which counties, even which neighborhood, it all might matter. So geography is the first thing that they need to know. Second one is going to be the deal size, okay? So with what Guy was already saying, it sounds like he's having deals with third party management, which means you're going to need like around 100 units or more in order to support something like that. But you got different types of teams taking down like say 15 unit deals from the people who are taking out down 500 unit deals. So that size, aka unit count, is definitely going to matter. And we're talking about Guy already mentioned that it's multifamily here. But the third one is called class. And unfortunately, many people use it two different meanings for the exact same word, but here's what they are. The first one has to do with the building itself, and that has to do with like its condition. So is it old? Is it beat up? Is it up to date, but it's kind of bare bones, no frills? Or is it really luxurious with all of the amenities and all that kind of stuff? So that's one version of class. Now, the other version of class is also called area sometimes, but what they're really talking about is like what's the crime rate like, and what are the school districts like, okay? And both of those versions of class are rated the same way as in grade school. So it's like A plus, A minus, B plus, and so on. So, Guy, as far as properties that are easier to say yes to, more difficult to say no to, if somebody has them, what you're looking for?
Well, in terms of multifamily properties, geographic area is important. And typically I would be looking ideally at emerging markets, but I'll look at other markets as well. But I also look closely at class. So I would like to see something C class property in a B area, B neighborhood, and then do some repositioning on the property to bring it up to a B property. So that's where I think we can make money in terms of value add. And in terms of unit size, I would prefer to work on the larger deals because it doesn't take all that much more time and energy to evaluate and get under contract larger deals as it does the smaller ones. So I just find it's more efficient use of my time if I can focus on larger deals. 80 units and above would be ideal in my world.
Beautiful, beautiful. So then the next question then has to do with people. And one thing that's fantastic about commercial real estate is that everybody, because there's so many roles, they're really eager to give referrals and help people out. And we're always building different teams. But that said, we all have our own unique skill sets. And so we're better suited to help some people more than others. Me personally, because of my CRM background, mass marketing, content on social media, and all that kind of stuff, the sponsors and KPs are the ones who I'm always most eager to meet because they've got the foundation where a guy like me really makes a disproportionate difference. Whereas most of the time, if you're just getting started as a repositioner, it's somebody who can put in like 80 or 120 hours per week that you're more looking for. And that's not really me. So, Guy, as far as you go, if you have any 506B deals, don't go enticing investors, whatever that means. Like if you have a donut or something on your desk, don't wave it in front of the camera. But it's like, who are you best suited to help? You know, you can always say beginners or something, even if you are raising. But who are you disproportionately well suited to help?
I'm probably best able to help people who are just embarking on their investing careers in multifamily properties, especially people who might need some assistance in analyzing properties and finding properties to begin with. One of my skills, which I've brought forward over my many decades of experience doing all kinds of different things, is I'm very analytical. So I'm good at analyzing properties and figuring out which ones would be good ones to invest in. So that's probably where I can best help people first
Mm-hmm.
starting out and in analyzing properties.
All right, beautiful. And as far as how to reach out, me personally, I'm always on LinkedIn. I've got a distinct last name, so that helps. The QR code that's right there on my screen, that goes to the FAQs page of 506B Me so that you know what that's all about. And the offer that's on there right now is that I can be your chief compliance officer for as little as $497 a year. But Guy, we met through some Zoom meetups through Neil Cronkite. And but what's the best way to reach you? Is it through a social media channel or a website or email or phone? What is it?
Uh, the business does not have a website at the present time. The
Mhm.
business, Montwa Realty, MONT, capital W, capital A, does have a Facebook page.
Mhm.
And I have a personal Facebook page and also a LinkedIn page. And of those three, probably my personal LinkedIn page would be the best way to reach me. So there are not a whole lot of Guy Batemans in the country. There are a few. I think there's like three or four. But
Mhm.
I'm if you Google Guy Bateman, that's another way to get a hold of me. GUYBATEMAN. I'm usually the first one that pops up. So look for Guy Bateman on LinkedIn. That's probably the best way.
Excellent, excellent. And the last thing that I have, it's actually not for you, Guy, but it is for you in the audience, which is kind of like a public service announcement, which is if you've been watching this and you're noticing like piercing pains in your eyeballs, like burnings, like migraine-like symptoms and stuff, it's probably because like be careful, don't look too like quickly, but under my left hand, there's a big ugly red button and you really should get rid of it. Okay. Now, the way you get rid of it is you just click on it and it turns gray. And I call it the gray button of tranquility. You will not have migraine like symptoms. It's just like it. See, it also has a magical power, which is why I'm biased and I want you to click on it, which is it means that if enough people click it, then YouTube might actually start paying for these videos instead of me. And that would be really, really cool. And as far as you're concerned, all it means is that my videos might show up on your list of suggestions, but you can feel free to ignore those. I just really appreciate the fact that you joined us today and spent this time with us. Just like Guy, I appreciate you joining me today. This has been great getting to know you a little bit better.
Yep. Thanks, Dan.
Awesome. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.